There are lots of different kinds of due diligence. I'm going to spend a lot of time over the next few days talking about the financial aspect of it, the debit, credit, the dollars. Okay. Doug, when he's here, is going to spend some time talking about operations and IT. James is going to talk about tax. Dan is going to talk about valuations. There's all different things, but from a financial statement, we have this very nice textbook definition, cash flow oriented approach, which means how much cash is the business going to set off. Sustainable recurring. These are two words we use a lot in financial due diligence, sustainable recurring. That means how much cash is it going to set up on a recurring basis. Okay? And then we translate this into this nice, simple, plain English description of what a financial due diligence is. Financial accounting analysis of business to analyze its recurring rate of earnings, working capital, and other financial metrics. What we're trying to do is get through all that garbage, get through all the marketing that the investment bankers do, and get to the real numbers on the financial side. What does this business really do? Because rest assured, when you first get into it, you're going to get a very rosy, very optimistic portrayal of that.
All right, maybe you recall this thing here, PO equals CF 1 over R minus G. This is the Gordon growth model. And it's illustrated for a lot of things, but the value, the price, is a function of expected cash flow, and we divide it by the discount rate, whatever our required rate of return is, minus the growth rate. Okay, so it's a basic model, and I'll refer to it. This is discounted cash flow. We're actually using a discount rate, whereas when you deal with an EBITDA multiple, you're multiplying EBITDA by something. But all right, so balance sheet, the accountants give us things related to historical costs, but as I emphasize to my students, in finance, we want to know what is the fair value, what's the market value. That's what we really focus on. We don't focus on net income, and Adam's talked about that. We cash flows. What does this thing generate in cash flows, and then what are they worth?
These are all critical cultural observations that we should be picking up in the due diligence that, again, has implications as we then start into the detailed functional planning and working with them. Pre-close probes. There may be areas, again, that says, look, we couldn't go into this deep enough, but you guys need, early stage, really need to drill down and launch a rapid action team to address this area. Because we think, A, there may be a huge opportunity, or B, we think there's a potentially large risk.
I'm going to focus on today, our main objectives are going to be raising awareness for security risk and streamlining document management during the due diligence process. So what's your number one concern or number one risk about security around document management? What would that be? Confidentiality. Would you say data being leaked would be a big one? Alright, so when is data security important? What we're going to focus on today during divestitures, restructuring, acquisitions, and mergers, of course, but it's something you should be thinking about all the time. Even when you're not within one of these projects, you're transferring security sensitive data every day. So we'll keep it top of mind every day. We're going to go over some best practices and policies and ways to streamline this. So leaked data, the number one form of leaked data is email, right? So what is the cost behind this? $429,000 is an estimated cost. That's not during an M&A transaction, so we could probably multiply that by 2 or 3, or even more than that, depending on the size of your transaction.
Figure out where your cost is, right? Each company's going to have a different cost stack. Look at where, if we focus, we can make a difference. Is it in direct labor, material, variable overhead? Get a good understanding of the financials sometimes can be an indicator of where you should look. The other way to look at it, if you don't want to look at the cost stack, have a conversation. What are the problems? Well, we've got pricing issues. We've got quality issues. We've got capacity issues. Have a conversation with leadership. Understand what the flashpoints are. That could be a sign for you to go do an ops diligence. It's not hard. It's have a conversation about it. What we recommend, like with any project, once you know what you want to look at, create clarity on your goals, okay? This is an actual scope summary that we did. Real simple, doesn't have to be 10 pages. Here's what we're doing. We're going to do an operational diligence, support a project Fox. Here's what we're going to look at. 3 things. Specifically, we're going to look at these elements. 1 page. Everybody's clear. We know what it is. We know what we're going to get. Okay?
Mr. Stoll,